We had the first monthly CPI data come out from the Australian Bureau of Statistics on Wednesday, and it came out at 3.8%. So this is the first time that we have received monthly data. The expectation was 3.6%. Came out at 3.8%, and the RBA trim mean year on year was 3.3%. With an expectation of 3%. So inflation is coming up. The RBA last month noted that the inflationary pressure was higher than expected, but they also noted that the unemployment rate also picked up a little bit more than expected. So that sort of balances itself out. If you've got higher unemployment, there's typically going to be an expectation of less demand in the economy. Obviously, that leads on to less inflationary pressure in general. However, we've now got this new information that's come out on Wednesday, that this monthly data that's basically pointing to the idea that there's even more inflationary pressure now than what was expected. We're now sitting outside the RBA's band. So the RBA has a 2 to 3% inflation target. That's their mandate. Once we start getting outside of that band, if we go above 3%, that's where the RBA will look to start restricting demand in the economy, and they'll start increasing the cash rate, which can flow on to lending, businesses, investment, different things like that, which will slow the economy down a little and reduce inflation. We're getting into that territory now. So the other thing is also there's been a slight drop in the unemployment rate since that last RBA meeting, so they'll be looking at that as well. So you've got unemployment coming down a little bit, you've got inflation increasing. Both of those things are inflationary. So the odds of another rate cut are off the table, I would think, in the December meeting. If anything, definitely best case would be for the RBA to hold rates. They may even start increasing. So we may even be on a path where they will start increasing to get ahead of this inflation that's getting out above 3% now. So they may start increasing rates from December. They're definitely not going to cut rates. So we'll see what happens. But yeah, I think the rate cuts are over. The other thing as well is with the 5% deposit scheme that the government introduced for first homeowners, the real potential there is for property prices to get out of control, which they already are. But one thing that pushes demand or shifts demand is an expectation of future prices. So in the property market, for example, the government introducing a scheme like this is good for obviously people that want to buy a new home, but the issue is the expectation of higher demand because of that. Property investors are seeing that, and these things can become a self-fulfilling prophecy. So the expectation of higher future prices will entice these property investors to start buying property now, more than what would have been the case. That in itself will actually create an increase in demand and be a self-fulfilling prophecy and increase prices further. So all of that combined, really, I think, rates are probably going to start coming up. Probably early next year, if not. I mean, they may even increase in December just to get ahead of it. But either way, I don't think there's going to be more rate cuts.